Good Thursday morning, everyone. Thanks for joining Market Chameleon pre-market show. Everyone take a look at the disclaimer. Realize that Market Chameleon, Dimitri, myself, none of us are broker dealers. If you need investment advice, please reach out to a registered broker dealer. Take one more look at the screen and the disclaimer.
Hey, Will, do you have it on mute by any chance?
It's not on mute. No. Let me ask the community and see what they're hearing.
Will?
Yeah, I hear you.
D. Okay, now I hear
No,
you.
everyone heard me.
Okay. Oh, that's weird. Okay.
All right, cool. Let's get started.
Yep. Good morning, everyone. Let me share my screen. While I'm doing that, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, put it into the live chat on YouTube. Will's watching it and he'll read it back to me. And to give you a couple minutes to put in those questions, we're going to start out taking a look at the pre-market report to see if we could get insights, what's going on in pre-market trading, and then we're going to move on to our questions. So this pre-market report up here, you'll see a calendar view, and this shows the last weeks of summarized pre-market trading data. This just allows you to eyeball quickly if there are any trends or patterns or something unusual, or you could just compare the dates one versus the other to see if today kind of falls in line with the previous days. Today, we are on March 20th, so that's this last date over here in the calendar. And so far, we see there are 451 stocks trading higher in pre-market, 309 stocks trading lower. As far as volume goes, we got 225 million shares trading on up volume, 44 million shares trading on down volume. And when we convert that volume to dollar value, we see $2.2 billion worth of stock trading higher, $2 billion worth of stock trading lower. So from this perspective, it looks like there is a bullish lean in pre-market trading. Let's look at it from a couple more perspectives, then we'll move on to our questions. I'm going to scroll down the page, and now we see a more granular view. We see stock symbols with prices and price changes in the pre-market. We see the volume, market cap, and alerts. We do have a list of our most active stocks, our biggest percentage gainers in the pre-market, and biggest percentage decliners. Here we have 49 stocks that made our biggest percentage gainers list, 27 on our largest decliners. So that also indicates a more bullish sentiment in pre-market. Now, to make this initial list, we do set thresholds because pre-market activity or volume tends to be sometimes very low or liquid. So we have certain thresholds in place. If a stock is trading in pre-market hours and meets those thresholds, it could make it onto this list, and that includes small cap stocks. You could see the market caps over here. It could be an ETF. It could be a leveraged product, an inverse product, closed-end fund. So to narrow down this list to a smaller group of stocks, we could use the filters above. If you have a watch list that you created because you like to track a certain group of stocks, you can use this filter here. It will retrieve that watch list, and you will be able to filter this list by your group. We're going to use this filter here in ETF. When we click on it, you get a drop-down menu with different ETFs to select from. And we're going to choose this one, SPY, which is the S&P 500 ETF. And when we do that, you could see that the list got filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And if we look at our largest gainers and decliners that are meeting those thresholds, it's 6 gainers versus 7 decliners. It's shown pretty much a mixed bag there. I would say very neutral. So far, we looked at it from a couple different angles, and the indication is that the traders in the pre-market hour so far are lining up to a slightly bullish to neutral lean in their trading. Okay. We gave it a couple minutes, Will.
D, we did have a question from Rob yesterday concerning the pre-market. He said, will D please discuss the chart below the pre-market? Does the lower chart track pre-market or just prior day? I'm referring to the opening page he starts with at the beginning of the day.
Well, I'm not sure I know which chart that's referencing.
All right.
Do you?
Rob, do you want to come on down and
read that again?
It says, Will and D, please discuss the chart below the pre-market. I'm assuming on the same page.
Okay.
Does the lower chart track pre-market or just prior day? I'm referring to the opening page he starts with off at the beginning of the day.
And this is I don't see a chart here unless you click like on a symbol, maybe. Is it like referring to when you click on a particular symbol?
Yeah, I'm assuming that. Is that the chart you're discussing, Rob, when you asked that question? Yeah, he says below where he is now. Scroll down the page he's on. Yes, that's it.
Yeah. Yeah. So when you click on a particular symbol from here on the pre-market report, you get a pop-up of analytics for that stock, and it has to do with either the pre-market activity and some other supporting data regarding like previous moves in pre-market. So the initial chart over here, this is for Intel. You could see it's up 2.6% in pre-market. Then we get this chart, and you could see here, starting from 6:05 p.m. going up to now. This is a chart of today's pre-market activity, right? So that's a price chart. Red is down ticks, green are up ticks. Then you have the volume bars up here. And this kind of just shows you how this stock has been trading in the pre-market hours, right? And it happened. I don't think Intel was in like one of our, oh yeah, so it did make it up here, 2.6%. Then below, you kind of have more insights into those price and volume activity. And here, right below this graph, we have 3 volume charts. Okay. The first one over here, it takes the volume weighted average price of the trades and puts them into buckets where there was a bigger concentration of trading, right? So this is over here. You could see this really big bar, right? The one that sticks out. That when we hover over it, it's the biggest volume, right? Traded between $43.56 and $43.70, over 600,000 shares of stock, which kind of just gives you an indication of where the bulk of the volume is trading, right? Because these are taken in price and volume. And then you have the distribution of the traded prices and the volume. So just on this chart alone, you could see if there are any perhaps air bubbles or illiquidity between certain price points. And, if it, so obviously here, looking at these bars, it's not evenly distributed. We don't see at every level the same amount of stock, right? Which seems like right here, there was a bigger exchange of trading going on at those levels. Then we had very little over here, jump to here. So this and very little bit over here. So this kind of gives us a indication of where the markets had the most trading activity, right? Exchanges of stock. Then moving over to the middle chart, right now we have this middle chart here. We're going to take this volume and we're going to break it down a little bit further. And we're going to say, okay, not, the volume itself could be categorized and sliced into pieces to gain even more deeper insights. Was this volume due to lots of small trades? Was it one big trade? Was it, how did that look like, that volume, that trading? So we slice it up here into 4 categories, from the very small trader, which could be like just like an odd lot, or maybe, depending on the price of the stock, it could be 100 shares, it could be 200 shares, depending on the price. So we give it certain cutoffs. And then we look at it from the perspective, is it a very small trader? Is it a retail size trade, but doesn't really quantify as like a very large one? Then you get into the larger ones, you get professional and then institutional. Okay. With institutional being the biggest volume trades. And this shows us at each level the distribution of those types of trades. So it looks to me like between, even where this big amount of trading happened, there was a lot of retail, professional size trades in there, and some institutional as well. So, that looks, but even if we were going from bar to bar, that, they look kind of, this distribution looks similar from bar to bar. Sometimes there's less volume, sometimes there's more, but here, we don't, it's not like we have one large green one, and then like red, yellow, green, and blue. They all look kind of similar. What would have stuck out is maybe if we had one really big green one, or one really big yellow one, or one really big red one, indicating there's all retail, no institutional. But here it looks like, from one level to the next, the distribution of trader type seems close, similar, right? Just by eyeballing it. So let's then go to the next volume bar. How else can we categorize it and slice it around? So there are two different ways a trade or an order can get routed. Right. Well, let's say there are more ways, but let's just say we could categorize them, in another 2 ways. One is that the order can get routed and traded on a dark pool, which is off exchange, right? So it's not in a public exchange, not on a lit exchange. It's on a private exchange, a dark pool, right? So it could be a broker dealer has their own nightcap, Goldman, Citadel, whatever. They have their own private exchanges that they could route orders and trade and match it up. Then the order could go to the dark pool, and if it doesn't have a matching, if it doesn't match up in the dark pool, right? If it's a limit order or even a marketable, or if it doesn't match up in a dark pool, it could go then to the lit exchange, right? Then it'll just go to the lit exchange and say there's no liquidity in a dark pool to match this trade. It'll go to the lit exchange. Lit exchange are like New York Stock Exchange, NASDAQ, BATS, all those exchanges, right? Those are the lit exchanges. Those are the public exchanges, and anybody can access those, or it could go straight to the lit exchange, right? It doesn't have to go to the dark pool. It could go straight right to NASDAQ, right to NYC or BATS or whatever. So, and that could indicate a little bit, give us a little bit of more insights how this traded and what kind of liquidity is out there, right? So here, what this is showing us is the breakdown between the trade volume, how much of it was in a dark pool, how much of it was on the lit exchange, right? So we could see even in this long bar, it's there. Looks like it's split there, like 50-50. But if we looked at this long bar here, it looks like it was all lit exchange. So what are the insights from there? When the first place, I would say that a order, probably a retail order, would get routed, if you can, is go to the dark pool, because private vendors want to have the order flow first go through their private private networks, private whatever ECNs, right? And even larger trades, even larger institutions who they don't want to first access the public exchange if they could get the liquidity in a dark pool, because then they don't have to show their hand, right? In the dark pool, they don't have to display their order to the trade tape to the outside world. They could try just to go into the dark pool and see if they'll match up with a counter side, if they could add that, if they could access that liquidity. So so what we're looking for is if there's a lot of trading that's happening in the dark pool versus the lit exchanges, and if all of a sudden there's something that's out of the usual, so we'd have to see what is usually happening. Each stock could be different. If there's a lot of trading in the dark pool, it indicates that there's lots of liquidity there in those dark pools. Perhaps there are a good amount of market makers on both sides. There are a good amount of institutions with maybe VWAP orders and so forth. So there's a lot of liquidity in those dark pools if we see lots of volume. If we see that volume, though, bypassing and making it to the lit exchanges, well, that could indicate that there's a lack of liquidity all of a sudden in the dark pools. There's a lot, that maybe there aren't as many institutional VWAP orders there, or at least not on both sides of the market. And that the accessing liquidity could be a little bit tougher, because then the last place to go to are the lit exchanges, right? If you can't get it somewhere else, if you can't negotiate and find stock anywhere else that you could buy or sell, then you're going to go to the lit exchange, right? And by going to the lit exchange, if you have a lot of stock to buy or to sell, well, what happens there is that, first of all, you're starting to expose your hand, right? Because you're going to be taking out offers or hitting bids, and you're also starting to move the markets. So what moves the markets, right? The lit exchanges. The dark pools don't move the markets. It's the lit exchanges, the displayed prices, that move markets, right? So once the displayed prices are disappearing, like say on the offer, and the bids are going up, the markets are going up, right? If the displayed prices of the bids are going down, then the offers are coming, then the market's going down. So anybody out there that is trying to get the best prices without moving markets, right? Without going to lit exchanges and starting to move the markets against themselves, will try to access those liquidities in the dark pools. Okay. So those are, from these three charts, those are kind of giving us those types of insights, right? Now, we'll come back when we keep going down. Now we have a more granular view of what's going on from minute to minute, right? So now we have for each minute over here, 851, 850, 849, these are pre-market. We have summary statistics for that minute, right? So I'm going to skip this one on balance because that's counting, up volume, down volume from 1 minute to the next. But here we see that there are 189 trades for total volume of 36,084 shares, right? So now we see in that minute how much volume traded and the breakdown of how many different trades, right? So it wasn't one big trade. It could have been one trade, though, that scooped the book and got split up. So that would be reflected in this. But it wasn't one block. The VWAP, that's the volume weighted average price, right? So where did the bulk of it trade at? What price, right? That's the volume weighted average price, because you take the trade price and the volume of it, you multiply it, then you sum them up, divided by all the volume, then you get a volume weighted average price. So instead of an average price, it's volume weighted average price, right? Because if 100 shares trades at one price and 1,000 shares trades at another price, well, the 1,000 shares has more weight, 10 times more volume traded there. That's the volume weighted average price. So by looking at the volume weighted average price, right, now we have it from minute to minute, we could see the change, right? So we're not looking at a tick, because each tick, it could be 100 shares here, 1,000 shares. So we're looking at from 1 minute to the next, how does this stock tick, VWAP tick? So here we see, 4 cents, 1 cent, 4 cents. So we get a sense of here. What do we get a sense? What's trading and the liquidity of it, right? Because we could see just from here alone, just eyeballing, right? What is the liquidity? Okay, you've got, between 5,000 and 36,000 shares, trading between each minute. So you kind of have an idea how much volume, could exchange hands from 1 minute to the next. And we see how much the stock, the VWAP price has changed. And so it's pretty tight. There's a lot of liquidity as far as, Intel goes, because you're moving a decent amount in a pre-market of, it's not 100 shares. We're talking about thousands, tens of thousands of shares from minute to minute. And the price isn't going nuts. We're not talking about like dollar moves up, dollar moves down. We're talking about, a couple pennies up and down. So that's showing us how liquid the stock is right now in the pre-market hours. And, these are maybe shows you kind of like some trends here by the ticks. Oops, hold on. If you click on one of these, it's going to sort it by the column. So what about, so that's the VWAP. So the VWAP price is, looks like it's changing, but by a couple pennies up or down. What about the range within the minute, right? Because do you have like small outliers out there? 100 shares trades down the dollar, 100 shares, and then a lot of it trades in between. So that's given us the high-low price per minute. So you can see from 413 to 443.05, 443.14, 43.13. So even the high low prices in between the minute look, pretty tight. Pretty that the spread between the high and lowers are narrow. Another thing we could look at is just the bid and ask prices, the displayed bid, because the displayed bid and displayed ask, they could be wide and things are just trading in between. They don't necessarily have to trade on the bid or offer. So just the displayed liquidity, displayed bid interest versus ask. So these are captured at the end of that minute. And here also, they look pretty narrow, from a penny, some of them wide now. Here's a 7 cents. We don't, right now I'm just eyeballing it, but I don't see anything, blowing out $1 or 50 cents or anything like that crazy. It looks like it could go from, as tight as a penny to 7-8 cents wide maybe on the displayed liquidity. So now you're arming yourself with all this information of how it's trading in a pre-market hours, what type of liquidity, what kind of price changes are we looking at from minute to minute, bid and offer of the spread, where the bulk of the volume has been traded, and how it's traded. So this gives you a lot of information just about, what's going on in this stock in pre-market hours. Okay. So we're right up 9:30. Well, I'm going to stop there.
Yeah, that was super helpful, D. I just wanted to walk up because Rob was super interested in what you were showing him, but what he was actually asking about, what's not really a chart, it's more a table. It's the table. So right below the start of where the most active gainers and decliners, there's it says change view, gap up and gap down. And maybe we can look at this tomorrow.
Okay.
He was asking about the gap up and gap down. And
yes.
so maybe,
okay, we'll do that then tomorrow. Yeah. Because
we also had a question, lots of questions today. Doug had a question. So Doug, about looking at a multi-leg. So maybe Doug, tomorrow you can remind me what multi-legs you want to look at and have D discuss. Great job, buddy.
All right, everyone. Thank you for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Trade in peace, chameleons. Have a great day, D.